Let's kick this off.
All right, great. Welcome to this episode of Note Closer Show, everybody. I'm Patty Ped, and today I'm here with Chris Seveney, and we are your guest host today. Scott's on a well-deserved vacation in London, and let's see what we have here. Let's start off by introducing ourselves and what we do. Chris, you want to go ahead?
Sure. Thanks, Patty. As Patty mentioned, I'm Chris Seveney with Seveney Investments. I'm located in Washington, D.C., and we specialize in the acquisition of first position, non-performing, and performing notes. Over the past 2 years, we've acquired over 50 assets. Primarily, we focus east of Mississippi and south of Pennsylvania. Our goal is to provide borrowers multiple options with the opportunity to stay in the home if they so desire, and also try and provide our investors above average returns. What I think is the little differentiator for our company is the dedication and the level of commitment that we provide to our partners, and also providing them the why as we go through the process and give them an understanding for what we're doing so they're always informed.
Sounds great. And I am Patty Ped. I am the owner of Ader Financials. And like Chris, we also invest in distressed mortgages, primarily first liens. We work with various investors. We have JV partners that we work with, IRA, institutions, individual investors, and we work together to achieve win-win situations for everybody who's involved, the borrowers, the banks, and the investors. And that's pretty much it. And Chris, I know you do have a full-time job, so you want to get started on, you want to tell them how you got started in notes, what got you interested, and how did you even learn about notes?
Yeah, thanks, Patty. I work full-time in Washington, D.C. for a real estate investment firm. We develop commercial properties, luxury apartments, office, retail. I've been in real estate for over 20 years. I graduated college with a civil engineering degree. Worked up in Boston until 2008, where I'm originally from Massachusetts, if you can't tell by a little bit of accent there. But then in 2008, with what happened with the economy, I relocated to Washington, D.C. In the last 10 years, I've been down here. And like most, I think, real estate investors, I started off doing the bigger pockets, the BRRRR strategy, I guess is the best way to put it, where I started off buying some assets that were dilapidated, getting them fixed up, refinancing them, getting them rented. But having, the full-time job and the family, and between, swimming lessons, taekwondo, little league, dance, trying to scale that business was extremely difficult. And then I got caught up on bigger pockets by this guy, Scott Carson, and started to hear about notes. And I thought that was the best of both worlds, because you can do it anywhere, anytime. You're not attached to getting access to a property by a realtor. Literally do it anywhere at any time. So like many investors as well, I think, especially being an engineer, started out with the analysis by paralysis, watched a lot of video, I think overanalyzed everything. And it took me about 6 months before I ended up buying my first note. So what about yourself, Patty?
Well, the story is kind of similar. It was my husband who initially got to know about notes. We were looking at we started off with rentals again. In 2013 or 2012, we started off with a multifamily unit. It was great cash flow. We were it covered vacancies and everything was going perfectly. And then the honeymoon period was over, and then the tenants started moving out. They started trashing the place. Some of them called us at like 2 o'clock in the morning saying that the toilets were clogged and we had to send in somebody. Imagine trying to find a plumber at 2 a.m. So we did all of that, and we realized that there should be something better and easier to do. So we started exploring all of our options. We looked at tax liens and other things, and notes was very intriguing to us. So we kind of explored a little bit into that. Just to kind of dip our toes into this, we started off with seconds, performing seconds, and they worked out beautifully. Then we went into non-performing seconds. We started off with that. Again, we had good success with that. So we slowly started scaling our business up a little bit more. And now we're dealing specifically with non-performing first mortgages. And we've built a good team of attorneys, servicers, realtors in all of these wonderful areas around the country. And like you said, we're not limited to our backyard. We're pretty much open to the entire nation, which is what, and on the other hand, we're also helping the borrowers in keeping their homes. We are providing them with options that the other bigger banks cannot afford to. And that's actually what glued me to this business. And it was wonderful because everybody was happy. Our investors were happy, the borrowers were happy, the banks were happy because they could get rid of all the bad loans from their books. So I like making everyone happy.
Yeah, I've got a similar story in that sense too, where I remember close to when I was closing my first note deal, one of my apartments, my tenants thought it was wise to put baby potatoes down the drain and called me up saying there was a clog, and a plumber went out and couldn't get it taken care of, and then realized she finally admitted what she had done and so forth. But I think that was kind of like the last straw for me in regards to getting back into notes. So you don't have the tenants, toilets, and termites, as they say.
Yeah, that's true.
With that being, I was going to say, with that being said, Patty, what do you see as the biggest challenges now in your note business that you face?
I think initially I had a little bit of trouble talking to the homeowners, only because I wanted to be sensitive to their hardship. I wanted to be able to help them out, but I was having a little bit of trouble in trying to word it in a certain manner so it wouldn't offend them, but it would still help them. And also, when I'm talking to the investors, I wanted to make sure that we were looking at the numbers correctly. And one of the biggest things, I think, similar to what you mentioned, the analysis paralysis. Initially, we were focusing so much on the numbers that it was kind of hard to look into the emotional, all the non-measurable aspects of this business, where we're looking into the emotional equity, how long the borrower's been living in the property, pride of ownership, how well they've been taking care of the property, and all of those other factors that kind of slipped past me only because I was focusing too much on the numbers. So I think because of that, I'm learning, but that was one of, I think, the biggest challenges that I had initially. Did you face anything similar, Chris?
Yeah, very similar. Oh, getting a little feedback. Sorry. For me, it was time and marketing. I think similar with you, running the numbers and analyzing the deals came naturally. And I think similar to you, I've seen your kick-ass calculator you have. I've spent many, many hours on my calculator, as you have, and it's great and it works great. But there's the softer side of investing, and you got to go with your gut sometimes. But where I really struggled was on that marketing aspect. If I have 3 hours a day, in my note business, I may not be the most creative or might not be the best writer. So something that takes somebody 5, 10, 15 minutes to do might take me an hour to do. And the only way to overcome that is really by just continue to work it and continue to focus on it, because most people enjoy doing things that they're good at. And when you're not good at something, you kind of sometimes want to push it aside or not do it. It's kind of like on your to-do list, you take off the easy tasks, but the more difficult tasks, you wait till the end or you procrastinate. That's kind of, I think, with marketing, how I have been. And that's where I think one of the areas that I've started to focus on, especially since we met in Austin and took Scott's Fast Track.
So, which brings me to the next question. How did you hear about Fast Track, and did you have any training before that to kind of prepare for Fast Track?
So I heard about Fast Track back when I started investing in notes. It was actually Note Camp 2. And Scott, for a social media award, would give away at that time, basically entry to his Fast Track for the social media award winner. So I saw it, I was like, oh, this is pretty good. I'm the type of guy who is very competitive. So when I go for something, I'm all in on it. And at Note Camp 3, I was starting to prep to try and, start marketing and doing the social aspects of it. But something came up and I really wasn't able to participate. So when Note Camp 4 came up last October, I basically went all in. And I really had two goals that I was focusing on. One is to work on my marketing and just get videos out there and let people know who I was. And the ancillary component to that was, trying to win. But if I didn't win, but I was getting my name out there and I was growing my business, to me, that was a win. So that's where how I got introduced to Scott's Fast Track program. What about yourself?
Gotcha. Similar story again. But I think because we started off in the second space, our training was a little bit different. And that too, we started off with performing first. So we did a few courses from Eddie Speed. We did a few from Fuquan Bilal, had amazing content on YouTube that I would regularly look at and try to learn from. We also we purchased material and attended courses from Scott, of course. So we did the whole Note Camp. I think we were our first one was 3.0, but before that we did the virtual note buying for dummies. We did the blueprint, I think was what started off, which I thought was beautifully crafted for new investors and for I think it was very clearly laid out. The content was amazing and the way it was laid out was perfect to any new investor who was trying to get introduced to the field and trying to get acclimatized with what's involved in this whole system. It's not just buying notes, it's also what you do with it after you buy it. And that kind of, and Scott's marketing, is amazing. So he got us hooked, and we kept reading about Fast Track, and we spoke to a lot of investors who've done Fast Track training before, and everybody seems to have such great opinion of it. So we thought, and also I think in our business we have reached a spot where we were ready to take it to the next level, and we wanted to scale it up to a really higher level, and we believe that Fast Track could give us that push necessary to do that. So going back to, and I'm assuming some of our listeners here are probably first timers or they've not heard of Fast Track before. So Chris, do you want to go over what Fast Track training is and where they could find some information about it and what we're talking about?
Yeah, absolutely. And just step back, even before the Fast Track, you mentioned some of the other workshops that Scott has at www.weclosenotes.com. You mentioned his virtual note buying workshop. I did the same thing. I started out with his virtual note buying workshop as well, which is a 3-day course where Scott focuses on really digging into some of the nuts and bolts of how to bid on assets, how to find asset managers, and how to market. It's an online course that spans over 3 days, which I had taken. That's where I got a lot of my initial education. The Note Camp is, he hosts it twice a year. Usually around April and October, which is 4 days of 30 plus speakers of content regarding just every aspect and phase of note investing. And you mentioned the blueprint, which is a video series that goes further into notes. I didn't take the blueprint, but I've, again, heard great recommendations on it. And then Scott has his Fast Track, which Fast Track is really one-on-one personalized and tailored training that you get sitting down with Scott in Austin for 3 days. When you talk to people who have gone to the Fast Track, everyone is different. None are the same, because it's really what caters to you or what your business needs. So, for example, when Patty and I went, again, we're both engineers, so the analytical side of buying the notes, we didn't spend as much focus or time on, because we had pretty good comprehension on that. We spent a lot of time and effort on marketing, which I think really helped both of us. And one of the things I'll mention is also, Scott has a lot of marketing promotional videos for Fast Track, which I'll be the first to say, what he says is true. He opens up the Rolodex. He opens up basically the business plan, the book, everything there for people to learn and really grow your business. And it's really from two aspects. One is the notes and understanding the notes in the business. But the second component to it is, you may have another business that might be in sales, or you have a product. How you manage and run that business will be different than note business. So it's really customized to how you can run that note, that note business that you have, and really gives you all the tools necessary that if you implement to continue to grow and be successful.
Absolutely. So I would like to add to that point, Chris. It's so true that even though you've been probably marketing for a while now, like we do our monthly webinars, we use LinkedIn, MailChimp, and again, most of them have come from Scott's previous sessions and training. But the Fast Track is completely different, because once you get there, you get the connections to all these dots and some of the things you've never even thought about. So I think that's one of the best things I liked about Fast Track training. And like you mentioned, the individual attention. All of these other trainings are more generic per se, but when we got into Fast Track, because we were familiar with doing our due diligence and our numbers, Scott didn't have to focus as much on that aspect of our business. So the questionnaire, I think initially that Scott sends out is perfect, because it asks you specifically what 3 things that you wanted to focus on during Fast Track, and 3 things that you want to take away from the training. And initially, my 3 things were a list of 10 things. And excuse me, I'm happy to say that takeaways are almost 20 or more than that. So it's much more than what I anticipated or what I thought we would cover. And the marketing piece was amazing. And then we've talked a little bit about approaching banks and how we can communicate better with them. We do reach out to many people on LinkedIn and we connect with them, but there is a method to kind of form a relationship with them. And Scott goes over a little bit of that during Fast Track, where he mentioned how we can work with the banks, work with the bank managers, these asset managers at other hedge funds, and everyone who's involved in the sourcing of these assets, and how we can build our relationship with them. And we also talked a little bit about the automation process, where Scott provided a few tools that could help us automate our business and kind of put it on the fast track, so to speak. So, yeah,
a dozen maybe.
Yeah, absolutely. So it felt very good to learn of all these tools, and these are huge time savers. Right now, if we are spending, say, 2 hours a day on marketing, using or anything basically, using these tools, even for recording of assignments, assignment of mortgages, all of those things. So Scott has resources to make note investing an easier process for you. Of course, you still have to do the work and you still have to put in the hours and you still have to do it. But there are tools that help you in this business. And I was mind blown a lot of times during Fast Track when I learned about that. So I think that's one of the biggest reasons that I would definitely recommend going to Fast Track to any investor. And again, it's tailored to you. So if you're a new investor who's never invested in notes before, it's still a good fit for you, because then Scott can go through step by step. But if you've done a few deals like Chris and I have, and if you've invested before, if you know the ropes, it's a completely different track, and it is fast.
So step back for a second, because you mentioned Scott, sends out the questionnaire and stuff. I'm curious, how did you prepare for Fast Track? Because that was one of the things actually that I struggle with a little bit, because I talk to people like Gail Greenberg, who has taught me a lot about this industry. And now her and I talk frequently. I think we're each other's therapists at times. But how did you prepare? I was curious, and I'll share how I prepared after.
So the questionnaire definitely helped. Like you, I spoke to many investors, and they all kind of mentioned the same thing, where they said it was a tailored course. So it's not like I could just prepare like I did for my exams, just go say something there and come back kind of thing. So the questionnaire that Scott sent out definitely helped, where he asked specifically what are the 3 things that I would want to focus on while I was at Fast Track. And that kind of brought me back to analyze what I've done so far. I kind of did a SWOT analysis to see what my strengths and weaknesses are, where the opportunities were, and what the threats were. And that helped a little bit. And Scott, a couple of weeks before our Fast Track, he had, I think it was Note Night in America session, where he talked about having a business plan. And I started writing my business plan. Everything was in here, but nothing was ever put on paper. So that a business plan definitely helped, because that also talks about who your vendors are, who you're working with, what your exit strategies are going to be, what kind of returns are you providing, and all those kind of things. And I was also trying to go back and look into my paperwork to see if I was lacking anywhere. So all of these things kind of added up. And also one of the biggest things that helped me was having a kind of like a 5-year plan, not 5-year per se, but so based on, and I think Scott went over this during Blueprint and one of his Note 9 in America sessions also, where he talks about our business goal. Say your goal is to make $300,000 a year. He would then kind of reverse calculate and see how many notes you need to do in order to have that kind of cash flow, and how many months or how many years it would take for you to get there. And based on that, you can again calculate how many investors you need to kind of get into that, how much capital you should be raising, and all those different things. So as I started looking into that, that also gave me a little bit of insight as to, oh, you know what, I have no clue how to do this, or no, I think I know what this is, but it would help to have a little bit more information on this, or some kind of clarity on this. So that also helped me a little bit in trying to figure out what I wanted from this and how I could take my business to the next level. If my goal said I needed to buy 100 notes by the end of 2018 or 2019, I needed to have a specific plan in order to be able to do that. And that kind of helped me find the missing pieces of the puzzle, which I wanted help with from Scott. So I think that's how it helped me prepare.
I think similar to myself, one thing I'll mention to people is that do go is you have to admit your weaknesses. I know people have pain points and and have difficulty at times admitting where they have weaknesses. And that's the one thing I would tell people is you have strengths, you have weaknesses, and Scott, having done this for such a long time, can help you on those weaknesses. And that's what I was focusing on is I wrote down what my pain points were and, which were for me, how to scale working full time, how to get out and attend events and keep balance. I know Eric Hyde yesterday talked a lot about balance in life, which is, I think, very important. Marketing was another area I wanted to focus on, and also not chasing the shiny objects because there's so much that gets thrown out at you. You don't have time to chase anything. The business plan, same thing as well. And actually, it's funny, right on my desk here, I've got this book, Traction by Gino Wickman. And I strongly recommend the people also take a look and read that book. It talks about business planning and starting out really with a one-page business plan. And similar to like what you did, I start with what's your big, hairy, it's called your BHAG, your big, hairy, audacious goal. So if it's to, be in notes full time, that could be your goal, whatever it is. It's just, what is the end? What is your end game? And then you just start working backwards from that. And you start with a 5-year, a 3-year, your 1 year, and then, okay, you got your 1 year goals. How are you going to hit your 1 year goals? You break it down by, quarters and what, you're trying to get accomplished. And they recommend as well hitting only 3 to 5 tasks because we can all put to-do lists of 100 items. And the reality is you're not going to get them. So start with small chunks and start hitting those. And it was interesting because I read that and worked on that right before going to Fast Track. And that's part of what I actually did for preparation. And a lot of that was once we got to Fast Track, very, very relevant. And I think it helped even with the experience within Fast Track as well. And like I mentioned, the SWOT analysis, same thing. If people don't know what a SWOT analysis is, it's SWOT, strengths, weaknesses, opportunities, and the T is not, you'll remember the T, it's not slipping my mind right now.
Threat.
What's that?
Threat.
Yes, threats, sorry. But it's really, simple piece of paper with 4 grids and you fill in the blocks is an example of what that is. And, your strengths, you still want to work on your strengths because a part of Fast Track, you can always improve. I mean, I don't think anybody out there is perfect or an expert in anything. So you can work on those. And that's what's great about Fast Track is it's what really you want to work on. We went in there in the morning and the question from Scott would be, okay, what do you want to talk about this morning? Besides the great food that we're eating, and so forth. And that's one of the things that we talk about a little bit already on Fast Track is just how tailored it is to everybody else. And, I'd ask you, Patty, you've taken other different trainings. I've taken some trainings as well. How do you see Fast Track being different from those other trainings?
I think the individualized part is the best part and the most different part. All other trainings that we've been to or we've seen are kind of generic. They do a wonderful job explaining the process and they kind of help you get started. But once you are in the trenches and once you start working on a few notes, you have very specific questions mostly. It may be related to a specific state or a specific deal or a specific way that you would want to deal with something regarding the attorney, or it may be anything basically. So from my experience, I haven't really, I know BiggerPockets does a few of these where you can go in and post your questions and get answers to them. And I know there are more venues where you could do that. But this was kind of like a space where I write down like 100 questions and still have Scott's expertise help me through that. And I know Scott is always available via phone and text and everything, and he's been helping us a lot over the past few years. But having this specific one-on-one time with him to go over those questions and kind of get clarity about the current deals that I have been working on for the past few years, sometimes even the agreements that I have with our JV partners or with the note sale agreements or the JV agreements or any of that. So I don't think this level of detail exists in any other training course out there, because again, this is an advanced course that you have access to once you've kind of crossed the threshold and once you've been in the business for a few years. And the resources that you get out of here are amazing. I haven't seen, I know a lot of people do share some resources online. The note industry is very, very friendly. Any investor that I've had experience to, just like Gail or Dave Putz or anyone out there, they've all been very nice. And Martin Science, they've always shared all of this information with us. But the ones that we got in Fast Track, I think, blew my mind, literally. There are so many vendors that we've never heard of, and it's more up to date, and there's more information, useful information in what's being provided there. So I think that's invaluable.
Yeah, I agree. It's how it's tailored, which we spoke upon briefly. If anyone's ever had executive coaching or training or anything one-on-one, that's really, I think, the best way to describe it, because it is a very small group of individuals in the room. When Patty and I went last month, it was just the two of us. So we really had, Scott, one-on-one, for the full period, and would go. And what's great also is there might be questions that you never thought of that other people in the group brought up that bring something up that is like, oh, that's how that's done, or this is how that should work. So it's also being able to see how other investors operate and work, and also ask other questions. It just, is better for a fuller development of yourself and your company, because you're working, with other people in the business. And as, Scott will be the first to mention, there's plenty of, I know people will talk about there's not a lot of notes out there, pricing has gone up, but the reality of it is when you get a tape of, 50 or 100 assets on it, I know I'm not going to be buying all 50 or 100, and Patty probably isn't either, because some of them might not even be in states that others invest in. So it's, the term that Scott mentions, co-opetition, is, just another example at the Fast Track that, everyone's there to learn and benefit their company, but there isn't a us versus them type of atmosphere by any means. It's, hey, everybody's there to try and help each other grow. And that's one of the things Scott really, I'll say, I enjoyed, it's one of the best things I enjoyed about Fast Track was, Scott basically really pushing us to grow our business and to challenge ourselves and things about doing marketing or being more on webinars or online and really getting present for ourselves. Because one of the things I thought at one point in time is, well, I'm getting this training from Scott and, I want to do some webinars and stuff, but I'm learning it and then using it and stuff. And, just wanted to make sure, hey, Scott, you okay with me doing this and so forth? And he's like, yeah, absolutely. I want you to grow. I want you to be better. I want you to, hit your big, hairy, audacious goal of, if it is leaving your full-time job in 5 years or 10 years, whatever it is. His goal is to make sure you're successful in trying to obtain your goal. What about you? What did you like about Fast Track?
I also wanted to throw in there that we do, with Fast Track, we do get the 4 mastermind sessions throughout the year. So we do have, with Fast Track, we have the 4 mastermind sessions, And Chris, do you want to explain what Mastermind is and what goes on at Mastermind?
Yeah, so sorry about that. So the mastermind is Scott periodically throughout the year takes his fast track students and they will go to typically somewhere where it's beautiful and warm to get together and spend a weekend together, really networking and getting in groups and sharing business ideas. So it's it's a true mastermind where it's people in the industry who are interested in continuing to grow, share ideas, bounce ideas off of each other. I know he's got one coming up in August that he's also teaming up with Quest IRA. So for those interested who are part of his mastermind, it's kind of a win-win that you get to spend a few days with other people in the industry who have been doing this for longer periods of time and share ideas and learn from them. And then after that, there's an event with 500 IRA investors, which self-directed IRA investors who are looking for places to invest in. So I've never been to the mastermind. I've spoken to people who have been to the mastermind, and it's the same thing, similar with the fast track, where Scott will bring in experts. He'll bring in Daniel Singer or other people, Laughlin and Associates, or Merrill Chandler. Some people you may have seen on his Note Camp or other videos and webinars, but they really take it to that next level. And that's really kind of the whole theme of Fast Track and the Mastermind Group is Scott puts out all this content with the podcast and Note Nights in America, which is great education and great content. I compare it to like getting a bachelor's degree, and then the Fast Track and Mastermind Group is like getting an MBA.
That's great. The upcoming mastermind is actually August 23rd and 24th, I think, and it's coinciding or kind of consecutive with the Quest IRA session. So this one, if you sign up for this one, you would also attend the Quest IRA's event with your mastermind, which I think is pretty cool because you mentioned everybody who's attending, or most of the investors who are attending Quest IRA session have money and they are looking to invest in a great deal. So if you have any great deals, so that would be the best spot to talk to other investors and kind of partner up with them, do some joint ventures, or kind of just find partners. So do you want to talk about a few deals that you're working on, Chris?
Yep. So actually, as part of Fast Track, when I was there, I was trying to close on a set of contract for deeds that I ended up closing on 7 contract for deeds, kind of spread throughout, actually. But since that time as well, I've had 2 deals that were kind of on exit strategies. One in Georgia that I had bought last fall. I had a deal in Georgia that we had acquired, and I'll send out a kind of a case study on this that we bought last fall. The borrower started paying, got her on a forbearance plan. Unfortunately, she couldn't keep up with the forbearance plan. She went dark, and in Georgia, as many of you know, it's a very fast foreclosure state. We filed foreclosure on December 1st, the first Tuesday in February. We actually held the foreclosure. Since that time, I was trying to work with the borrower to stay in the property and have a family member buy the property. We went back and forth on that, and finally had somebody she knew go out and buy the property. One time we were going to do carry back a note for a family member, but at the end of the day found somebody who could pay cash for the property, which ended up actually being better for us because it actually, even though we weren't getting as much money on the deal, having a note held out there for 10 years with a payment stream versus taking the cash in hand right now was a much better deal. So been working lately on that deal. I've got a deal in Ohio that I'm actually going to be doing a webinar on June 3rd with Andy from Polaris that people will be seeing come out. Working on that deal, which is I just can't comment on it right now. That one's a little painful, but also just wrapped up a deed in lieu that the borrower was looking to get on a trial payment plan, couldn't stay on it, and realized that no longer wanted the house. And in a similar instance, knew somebody that would buy the house and basically rent it back to her for a very low amount. And it greatly enhanced our fee on it, because within a year, we basically are getting pretty much what the UPB on the note was. So that one's providing a really nice return for investors. So it's interesting as you start to work through a lot of your notes, just the different exit strategies that you see. Recently, I've had, the foreclosure, then resell as an REO, have a short sale that's going to be closing soon, have a deed in lieu, have, someone on forbearance plans that turn reperforming. So you really get to see that aspect of everything. And I know the question's been tossed around as well, kind of what are your percentages on things? And it really depends in that sense. On contract for deeds recently, I found I have a much higher rate of getting them reperforming, whereas the notes probably at about 50% foreclosure. But that's a little scaled, because I had bought 5 or 6 notes from a hedge fund that was closing out their fund, that they basically were completely upfront saying, hey, you're going to have to foreclose on these. So that kind of skewed the numbers a little bit. But that's one thing, as you get experience in this business, it's always good to see all those exit strategies. And I know you had that deal just outside of Fort Wayne that was going to foreclosure auction. You got some other deals as well. What do you got going on?
So the foreclosure auction actually happened on Tuesday, and we got the property back. I'm happy because it's a clear title now, and it's an REO, so we can go in there, have our realtor go in there, change the locks and everything, and clean up the place a little bit and put it up for sale. So that's going to happen soon. It's going to take a couple of weeks for the deed to be recorded on our name, Ader Financial's name. So that's something that's been cooking. We do have one other deal in Michigan where the borrower is on a forbearance plan. She was basically facing a lot of hardships with her husband and her son's death, like 11 months apart, and she was having a hard time with disability, so she was on Social Security and everything. So we worked with Andy Polaris on this one, and Andy Lindloff, and he was amazing. He worked with the borrower, and he was able to negotiate a forbearance plan for us. And now we're getting monthly payments from her. Everything's good. The other home run we had actually was a Connecticut deal. Now it is a second mortgage, it was, where the borrower actually tried to file for bankruptcy, but luckily I've been able to talk to him about it, and they've negotiated a deal where they reinstated their loan. It was $17,000 UPB at the time we purchased it. They were able to reinstate with arrears. I think it was about $12,000 at the time. So they did that, and they recently paid off their entire loan. So we got lump sum cash back, and we are ready to, or looking to, reinvest that money into a few other properties. So it's been fun. It's been busy. And we're also looking into CFDs now. So we placed a few bids this week. We're hoping to hear back from them actually on Monday or Tuesday. So we have all of our preferred investors who signed up with us. They're waiting to hear back from us. We do send out deals to our preferred investors first for as soon as we have information about the deal that the bid has been accepted. We do our due diligence and we send out these emails to our investors, and depending on who's interested, we work with them. So that brings me to contact information. If anybody's looking to learn more about note investing, or just chat in general, or if they want to JV with us, basically we're open to conversation anytime. You could reach me at 267-571-6119. That's my phone number, 267-571-6119. Or you could just shoot me an email at patty@aiderfinancials.com. That's AIDER financials.com. Or you could go to our website, aiderfinancials.com, and you would have some information about the advantages of investing in mortgage notes. And we do monthly webinars with Advanta IRA, where we talk about investing with your IRA money. And as I mentioned before, we also partner up with individual investors who are new to notes and who've been hearing about notes, but who've had the paralysis because they've been analyzing too much, and they're just looking for some hand-holding initially so they could get started and get introduced to the note business. And we've had some investors who've gone off and become individual investors themselves, and now they're raising money to JV with other people. So it's been going good. So call me anytime or email me, and I'll be happy to talk to you and help you get started. Do you want to throw out your contact information, Chris?
Yeah, thanks, Penny. For those looking to reach out to me, I can be reached at 202-304-2784, or Chris, CHRIS, at the number 7, the letter E, investments.com. And email or contact me on my cell, best way to reach me. Similar to like Patty, I'm starting a webinar series coming up starting on June 3rd, where I'll have Andy Linloff from Polaris speaking on that. And in mid-June, I plan on having Brian Gallagher, who is my transaction attorney, who did all my documents, my JV agreements, my operating agreement. He's a Maryland-based attorney who's also an investor and represents some hedge funds. So I invest heavily in Maryland, which is, I'd say, most note investors will shy away from Maryland. I enjoy Maryland because of two components. One is it's a little trickier and a little more difficult to invest in Maryland with some of the debt collection licensing laws and issues that are there. But knowing that it's in my backyard and a little difficult, and there's not as many people investing in that area, I've still been able to find some decent deals in that area as well. So, Patty, we do have a few questions. That we have one from Roy asked, has anyone who owns CFDs been called by home occupants for maintenance issues? If you mind, I'll answer that question.
Sure, yeah.
Roy, typically on the contract for deed, the way it should be written is that the borrower is responsible for maintenance on the property. The best way I like to explain CFDs to people is for people who purchase and finance a car. If you go to Toyota and buy a car through Toyota Finance, they still hold the title, but you're responsible for repairs, maintenance, taxes, insurance, the whole gamut. A CFD is the same thing. You are the Toyota financial of it, where they just pay you and you hold the title. When they pay you off, then they can get the title, but that borrower is responsible for all those aspects of it. So I hope that answered your question.
Yeah, absolutely. So, Chris, what are your suggestions for new investors who are just starting out in the note business? And we'll wrap up with this one.
Okay, no problem. So actually, I'm in the process of wrapping up a blog post that I call the 7 Deadly Sins of Note Investing, which talks about the 7 things that we all do that we know we shouldn't do. The analysis paralysis is one of them on the list. But one thing that I see with some of my JV partners that I've worked with, because a lot of them want to learn notes, so I'll let them get some education as part of the process as well, because my goal is if they want to learn notes to go on to buy their own notes, I'm more than happy to, because again, they learn from you and it's just another referral. Mm-hmm. Going from, and I've had this problem too, initially, and then you just go focus, is starting out with the analysis paralysis and then hitting overdrive and then trying to do too much. And this is a very patient industry in the sense of how things operate and how things work. And things just take time. So people, I think, need to understand just from a timing, and that's where communication, I think, is key, to let people know, hey, we're in this node, in this state. It's not going to take, 3-4 months before it's resolved. Most of the time you fund a deal on, call it, today's May 24th. So if you were funding a deal today, that deal isn't getting boarded most likely till around July 1st. And if you're not using special servicer or somebody to reach out, it's July 1st. And then really, the hello letter goes out, and then the borrower has 30 days to review and dispute that claim. So all of a sudden you're on August 1st, where right now you're basically at June 1st. So 60 days have gone by, and there's things you can do during that time. But typically most of, I've had a few resolutions during that time, but most of the time you don't. And then, then you send the demand letter, then you have to wait, 30, 45 days from there, then the foreclosure, and then, that whole process of, like you mentioned, the one in Indiana is you just had the foreclosure, but now you got to wait several more weeks to get the deed till you got to the property. So it's all those little increments that people, I think, should take into consideration and just remember. Another thing I tell people is that, people start talking or looking to JV with people, is talk to many people. If you have the funds, you may want to look to JV with an addition, 2 different people, just to get an aspect or different aspect if you want to learn and go out on your own, that you may eventually do. But I see so many people on Bigger Pockets and stuff that post these things and say, oh, I'm stuck with this person, or I want this. It's like, this isn't a marriage. It's, you've got so many options out there of, there's a lot of good note investors out there, including yourself and I, that people can team with, that, you need to talk to them and just get the understanding of the comfort that it's a mix. There's people I've spoken with who I just didn't feel right, and didn't feel a synergy between us, that I wasn't sure it may or may not have been a good relationship on. Nobody wants to turn people down, but the last thing you want to do is get caught in a relationship that is doomed for failure. So what about you? What suggestions would you have?
Absolutely. I agree. The point about being realistic is very, very important, especially about timelines and costs involved. And like you mentioned, it takes time to board the loan, and there's CFPB rules, and there's so many other rules that we need to abide by in order to do our business in a very legal manner. So it is a time-consuming process. You're not technically spending all of that time, but there's a lot of waiting time involved. Especially if you're a new note investor, and if this is your first deal or your only deal that you're working on, it may seem like it's going at a snail's pace, which is what, as you buy more notes and as you're doing more, you kind of have consecutive things going on, and it wouldn't seem like you're waiting so long anymore. But yeah, having realistic expectations about the timeline involved, and having clear understanding of the exit strategies, when you're doing your due diligence, I think if you can focus on what the exit is going to be, but also remember that it may do a complete 180, and it may not even be that what the note that you think might become a reperforming, you may end up actually foreclosing on it, and you may end up actually getting more money than you imagined on it. So there's a lot of uncertainty in the business, but also be prepared for it, but don't be so paralyzed by all of these scenarios that you're not actually making the move. The only way to actually get past that is to actually do a few deals, try to understand the process by doing them, instead of staying on the sidelines. And I've said this before, and like adding to your point, if you're really worried about it, partner with a senior investor who's done a few deals before and who knows the business, who has a great team that they've been working with. They have their services, realtors, and everybody they can share with you during the JV process. So you don't have to reinvent the wheel every time. There's people who've done this before. They've been in the business for many years now. So just partner with them and try to get the best of both worlds, I guess. Yeah, that's pretty much.
One last question is, with Fast Track, how long you think it will be to take you to get your return back on Fast Track, and how long or how much or the time period do you think it expedited your company and where you want to go?
That's a great question, because I asked myself that even before I got to Fast Track. I wanted to make sure that I wasn't, pouring money down the drain kind of thing. And I stand by my decision. I am very happy that I did Fast Track, especially because I was interested in learning more about CFDs, and I was hearing things from other sources. Gail spent hours with me on the phone trying to explain the process, and I've been reading up all these books and everything. But now I think reviewing that information with Scott gave me the confidence to jump in and start buying more CFDs, which is actually what we bid on this week. So I think the returns are going to be really good, especially because I dealt with the analysis paralysis part, where my bid always ended up being the lowest bid ever. I would put in these bids, and then once the results were out, I would go back and ask them what the loans actually went for. And the numbers kind of astounded me. I'm not saying those are the right numbers, but I know I could have done a little better, and I could have kind of matched some of those numbers on a few deals if I didn't consider the worst case scenario on each and every one of my deals. So now I think I have the confidence to go back, and I've kind of revamped my ROI calculator a little bit, and my bidding process. It's new and updated, like they say. So I think I have more confidence now, and I think it's brought me closer to the goal than I was before, and it really did put me on a faster track. All by myself, I probably could have reached there 10 years down the line, but this definitely put me on maybe a 3-year track, and it's definitely helped me. How about you, Chris?
Yeah, I thinking about it, I would see between 6 to 12 months, you would, the returns would pay for itself from the financial aspect of it. But then on the long-term goals, if I had a 5-year plan, I think that now would be stretched down to probably 3 years. But then if I continue with the masterminds and everything, probably could even knock it down to maybe even 2.5 to 2 years. And again, with market conditions and everything. But, when I finished the Fast Track training, I spoke to Gail and a few other people, and they asked me, was it worth it and stuff? And I basically if you do what Scott says and follow his instructions, within 6 to 12 months, depending on how many notes you buy, it pays for itself. And it pays for itself that many times over, because of the fact that if, my big, hairy, audacious goal was 5 years, after sitting down with Scott and tweaking just a few things, that can drastically reduce that timing as well. So.
Yeah. And also you mentioned that you wanted to get away from the full-time job and become a full-time not investor. So do you think this training helped you get closer to that goal also?
Oh, absolutely. Eventually goal would be, I mean, I love my full-time job, and I don't have any plans to leave it in now or the near future. I plan on continuing to do both, but after taking the training, it's allowed me to scale it to a point where in a few years, I have that option. And when you have the option to do one thing or the other, it's, life events, happen, and things can happen to people or things change. So having more options available to you, the better off you are. So that's kind of my goal is, staying with both and running down that avenue. But there may come a point in time that I make a decision to, I'll say, flip the switch and hit this full time. This was talked about at Note Camp, and I had a goal of 5 years, and Scott looked at me and shook his head and laughed and said, "You can probably get this in 2 to 3." And after sitting down with him and just tweaking those few things, he was right. So
that's great. That's great. Well, thank you so much for sharing your experiences about fast track training and in the note industry. I hope this has been useful to you, listeners. If you have any questions at all, or if you just want to chat, grab a cup of coffee or something, please do reach out to us. Our contact information, you can reach me at patty@aiderfinancials.com. That's AIDER, aiderfinancials.com. And Chris can be reached at chris@seveneinvestments.com. That's the numeral 7 and the alphabet E. So yeah, thanks for tuning in to today's episode of the Note Closer Show. We have more amazing guests coming over on the next few days. Tomorrow, actually, is I'll be back for Women in Notes with Gail Greenberg, Gail Villanova, and Katie Martin. So tune in same time tomorrow, 10 a.m. CST, and see you all there. Thank you, Chris.
Thank you, Patty. Good seeing you again. Thank you, Scott. And look forward to see everyone on some forthcoming We Close Notes webinars in the upcoming weeks.
All right, great. Thanks, Scott, again for the opportunity.
Thank you.
Bye-bye.